Ethereum staking recently surpassed $118 billion in value as more ETH was locked on-chain, a record high for the protocol. Bitmine boosted its validator participation and staked big volumes, for example, large batches such as an 86,848 ETH stake, pushing its total staked exposure into the multi-hundred thousand/million ETH range and contributing materially to the total. The company's treasury is huge, and it continues to add ETH, including 35,268 ETH bought in a recent week, meaning Bitmine is both accumulating and locking tokens, reducing circulating/liquid supply. Analytics platforms are flagging a structural shift toward long-term holding models. Large treasuries are reducing exchange balances, which tightens liquidity and can magnify price moves when buying increases. Bitmine is a major actor in that story. The big picture: staking just hit a new record. Let's start at the macro level. On-chain trackers and market analysis show that the amount of ETH locked for staking recently surpassed a new peak, measured both in tokens and in dollars, pushing the staked market capitalization above $118 billion. That marks a historic moment for Ethereum's transition to proof-of-stake dynamics. More of the supply is now delivering yield rather than sitting liquid on exchanges. Why that's important? Staking transforms idle holdings into yield-bearing, semi-liquid assets. The more ETH that's staked, the less is available for spot trading, which matters when demand surges, ETF inflows, large corporate buys, retail rallies. The net effect is simpler than it looks. Less liquid supply plus steady or rising demand, bigger price moves on smaller flows. Think of it as turning a wide, slow river into narrower rapids. When the water speeds up, the ride gets more dramatic. Where Bitmine fits: not just a buyer, a lockup machine. Enter Bitmine. The company has been doing two things simultaneously: buying ETH into a giant corporate treasury and staking meaningful chunks of it in validator infrastructure. That double action is important because accumulation increases long-term ownership while staking removes tokens from the available trading float. Both actions tighten supply pressures. Bitmine has been explicit about its intention to be a long-term ETH treasury and to build validator capacity, Maven. In recent weeks, Bitmine reportedly staked large batches of ETH. For example, data show a staking transaction of 86,848 ETH as part of its scaling, lifting total corporate stake positions into the hundreds of thousands or low millions range. Those are material fractions for a single public company and thus not just a curiosity, they are a market force. Picture Bitmine as a big tractor in the ETH field. One tractor loads up bushels, buying ETH, and then drives them into a locked silo, staking. The more silos you build, the fewer bushels sit in the market. By the way, if you are getting value from this video so far and want more like this, please like the video, it means much to us, and hit the subscribe button, and comment the word more. Just go ahead and type the word more so I know. Now that you have commented, let's continue. The arithmetic of scarcity. Why locked ETH matters. Let's quantify the dynamic simply. Suppose the market has 100 apples and 30 get locked in a seller long-term. If demand grows from restaurants or speculators, they now have only 70 apples to fight over. That shortage increases the price volatility. Replace apples with ETH and you get the idea. As staking rose to record levels, above that $118 billion figure, available ETH on exchanges, the sellable ETH, fell to multi-year lows in many measures tracked by analytics firms. Bitmine's token locks are part of that aggregated movement. Why liquidity matters beyond price. Fewer tokens on exchanges also affect derivatives markets, funding rates, basis, and market makers' ability to hedge. In thin market conditions, squeezes are easier to trigger, the kind of thing that makes fast, big upward moves and downward moves when sentiment flips. Tom Lee's buy, 35,268 ETH and the ETH/BTC ratio signal. One of the spicy details executives like to highlight is active buying. Bitmine's chairman Tom Lee recently disclosed 35,268 ETH acquired in a single week. That's serious buying power and the sort of number institutional desks notice. Large, public buys are visibility events. Other funds and traders see the company is still stacking ETH even after previous megabuys, signaling conviction. Lee also called attention to the ETH/BTC price ratio, essentially how much ETH costs relative to Bitcoin. When that ratio climbs, it can mean institutional flows are rotating into Ethereum versus Bitcoin, often because of Ethereum-specific narratives like tokenization, DeFi, L2 adoption, and smart contract native finance app development. If institutions truly prefer ETH exposure, the demand side of the supply/demand ledger gets heavier for Ethereum versus Bitcoin, another structural tailwind that could lead to $7,000. If Bitcoin is blue jeans and ETH is the tuxedo of new finance, a rising ETH/BTC ratio is people deciding tuxedos are trending at the gala. Tuxedos suddenly get more expensive relative to jeans. Analytics confirm a shift to long-term holders. Multiple analytics platforms and market commentators are tracking the phenomenon. On-chain metrics show rising amounts of ETH in staking contracts and falling balances on centralized exchanges. That combination is a strong signal that more ETH is being held for the long haul and not just waved around by traders. The $118 billion staking milestone is an aggregate result of many actors making similar choices, treasuries like Bitmine being a big, visible one among them. Why analysts care? They can model different scenarios. If exchange supply keeps shrinking while demand triggers, say, a big ETF approval or institutional inflows, price models that assume constant supply suddenly underestimate how high prices could spike. That mismatch is where volatility and big moves emerge, and where companies like Bitmine become systemic players, not just interesting footnotes. How Bitmine's strategy plays out in markets. Bitmine's playbook is straightforward: accumulate ETH, stake a portion through validator participation or managed services, MAVN, and combine the treasury's appreciation with recurring staking yields. That strategy has three market impacts. Long-term accumulation increases the company's claim on ETH supply, staking reduces short-term tradable supply, public visibility creates signaling effects, other institutions copy, momentum traders chase, analytics pick it up. Result: when Bitmine announces additional buys or big staking moves, price moves can be outsized compared to the raw flow, because the market is semantically reading these moves as structural changes, not just another buyer. It's like a big retailer announcing it will keep 20% more inventory in warehouses for exclusive customers. Smaller shops then panic stock or imitate, and suddenly the supply chain dynamics change for everyone. Note this as well. Note this as well. Daniel 7 verses 25-27 tells us, "And he shall speak great words against the Most High, and shall wear out the saints of the Most High, and think to change times and laws, and they shall be given into his hand until a time and times and the dividing of time. But the judgment shall sit, and they shall take away his dominion, to consume and to destroy it unto the end. And the kingdom and dominion, and the greatness of the kingdom under the whole heaven, shall be given to the people of the saints of the Most High, whose kingdom is an everlasting kingdom, and all dominions shall serve and obey him." Want more information about the books of prophecy? Please check the description section. That's the end for now. If you have watched until the end, drop a comment like this: "I stayed until the end." Just comment that I stayed until the end. When I see this comment, I will give you a heart. 3 more favors I request from you. First, like this video, subscribe, and then turn on the notifications bell. If you do this, you greatly encourage us to continue bringing to you more insightful videos. Do not miss out on our future videos. All I am asking is your subscription. Thank you for joining me today. Your support means so much to us. Do not hesitate to share this video to help someone who may benefit. I recommend that you watch the next video, subscribe to the channel, and share your thoughts about today's video. Wish you God's love.